afternoon to our speakers, guests, and friends in the media to Teching Up Consumer Financing, an event organized by the Fintech Philippines Association and Digital Pilipinas. Today, we have brought together some of the leading figures in financial technology in the region to discuss the future of APIs, Fintech, Web 3.0, and what all these mean to the country and its progress and development. Web 3.0 is an internet paradigm in which information on the internet will be organized in a manner that was not previously possible or even dreamed to be. A key feature of 3.0 is APIs. These will facilitate a rapid exchange of large amounts of important information, often curated from multiple sources. The volume, speed at which the very specific and relevant data is exchanged would not be possible without APIs. The applications and implications are limitless. To explain more about this brave new digital world that is opening to us is Ms. Amor Maclang, Digital Pilipinas and World Fintech Festival convener, Fintech Philippines Association trustee and executive director, and co-founder of Geyser Maclang Marketing Communications Incorporated. Let's please welcome Ms. Amor Maclang.
Bettina, thank you so much. Magandang hapon po sa inyong lahat. Very, very pleased to be amongst colleagues and friends in the industry. Yesterday, I was with several of you, and we talked about how COVID has really been almost devastating to the educational firmament. The consumer and the finance lending space is not without its own challenges, right? So with the interest rates at an all-time low and regulatory and data privacy requirements constantly evolving, it's continuing to be a challenging time right now, and it could very well be a make or break time for many lenders. Now, there are several conversations that we hope to be able to surface today, and one of them is really how to tech up this particular space, how API integration can solve the technology, the cybersecurity problems, given that we know that not all APIs are created equal. We hope to be able to surface best practices that will transform our industry together, and in the process, create a virtuous cycle for that will be more pro-consumer and protect many of us. Now, some of the conversations that we hope to surface today would be the role of big data, artificial intelligence, RPAs, and the role of APIs in relation to them. But more importantly, how do we ensure that we do transactions in a manner that is safe and secure, so that at the end of the day, the control reverts back to our consumers. They can demand their financial history, or Todd would say, without having to pay 100 pesos per page coming from banks, right? We now want more control, better control, and eventually all of these efforts, we hope to be able to ladder up to a joint national open finance journey. Just today, the Banco Central talked about piloting open finance projects as early as Q2 of this year. Expect Fintech Philippines Association, the largest trade industry that looks at fintech as a horizontal rather than a vertical, that's powering many industries. And in behalf of our movement and our many conveners in Digital Pilipinas and the board and trustees of Fintech Philippines Association, led by our chair, Dr. Tito Ortiz, we would like to welcome all of you, those who are currently logged on right now, and those who are watching in our live stream via the Fintech Philippines page and also the Digital Pilipinas page. We're very grateful to be joined by members, friends in the industry, all regional market leaders, as we look towards teching up consumer financing. Maraming salamat po. And I look forward to all building a digital Pilipinas with everyone. Back to you, Bettina.
Thank you, Amor, for those wonderful words. Before moving forward with our discussion, let's take some time to learn a bit about our panelists and the organizations they represent. Let's welcome Jerome Eager, founder and CEO of Smile API. The floor is yours.
Hi, thanks a lot. Yeah, in a nutshell, Smile is a platform that is serving fintechs. It's mostly, very simply, the one trusted source for employment data in Asia. So essentially what we are doing was we're connecting to payroll, to the gig economy platforms, to freelance platforms, and Smile is essentially building a bridge between your employer and your fintech application. And in the middle stands the end user who is empowering himself essentially by passing on access to the fintech that he would like to work with. So applications are for lending, for essentially for all sorts of banks, whether it's incumbents or challenger banks, for BNPL applications, essentially the space in fintech where so verticals are interesting are the ones that I mentioned. There's also the different applications, right? So when we're looking at KYC, so there's a possibility to use the information that is caught in the silos, essentially, of your employer. And you can use this information for KYC purposes, which is a big application specifically in the Philippines, but also in other countries in Southeast Asia. Obviously, income information is not the only thing that you will get from your payroll. There is also a lot of other contextualized data. For instance, how long have you been employed with a specific employer? How much have you been earning over time? What is the change in the earnings that you have made for a specific employer? Or as the frontier between employer and employee is a little bit unclear in these times, specifically when we're talking about freelancers that are evolving into digital SMEs, you will also get a very clear overview as to this space is evolving. So Amor, first of all, thanks a lot for having us. She just mentioned that especially during COVID, the digital transformation is becoming more and more important. So the role that Smile plays in this space is especially interesting to look at when you see that, for instance, you have people that are moving from traditional employment into the freelance space and become employers and employees in this freelance space. So let me sketch this a little bit more clearly. When we are talking about how you become an employer in the gig economy is by first of all, maybe registering on one of the big platforms and then starting to get orders and to create a deal flow. And then one by one, you develop and become an employer yourself. So some of the orders you might want to pass on to some of the other participants. So it's getting more and more complex where income comes from, how we can prove income to fintech, to lenders, to SME lenders, to long-term lenders. How do we do banking? And how do we basically conduct a compliant KYC in this world where we see that everything is moving online, is moving to the cloud? And employment really plays a very important role in this new environment, because we spend so much time working. The day has 24 hours essentially, right? So we sleep 8 hours and then we have some free time, and then the rest of that is essentially work. And all of the data that is created during work is mostly captured in these platforms that I just mentioned. But work in and of itself is also changing, and this is something that we at Smile really take into our focus, considering not just gig work and freelance, but also there are other ways to earn money. We already mentioned the play to earn model in another context. There are also several different ways, for instance, as an influencer, right? As a delivery guy, as a taxi driver, and all of these sources of income that are essentially enabled through these new streams of digitization, through payments, through e-commerce as well. So whether you are a seller on Shopee or Lazada, these are all income streams that, if you are able to realize them for yourself in these tough times, you will also, through Smile, be able to show them to a third party and to a financial institution that is interested to give you a credit and to accept you as a new customer. And for fintech, on the other side, the convenience basically that comes from that is to integrate all of the employment information through a single API, and that gives you an additional edge basically in that aspiration to get that 360 view of your customer. So this is in a nutshell basically is what Smile can offer to its clients and its stakeholders.
Thank you, Jerome, for that. We're definitely excited to see Smile API grow in the space that they're in today. Next up, we have Todd Schweitzer, founder and CEO of Brancas.
Hi, everyone. Good afternoon, and thank you so much for attending. And great to hear Jerome. We're big fans of Smile API, and I think they're addressing a real fundamental gap in alternative credit scoring and giving verified access to consumer data, particularly for the millions of Filipinos that whose employment is, let's say, non-standard, either working on Upwork or freelancer or through the gig economy. And so really impressed with what Jerome's team is doing. I'll share some slides a bit later, a little bit more about Brancas' point of view on open APIs and how they can support consumer finance. But just as a very short intro, Brancas is an open finance technology company. So we're a tech company, a startup, although we're a little bit more mature now, about 120 staff across the region. So I am based here in the Philippines, but we have teams operating across the region in Indonesia, Vietnam, Thailand, Singapore. And what Brancas does is providing the APIs and the security infrastructure to enable financial institutions and even non-bank financial institutions like remittance companies and payment processors to make secure APIs available and being able to connect those APIs to third-party applications. What does that mean? That means me, a customer, being able to link my bank account or my remittance profile and being able to move to send data, to send a payment, to be able to verify my identity. And this is particularly relevant in the Philippines, where access to verified alternative data for credit scoring is so important. So a lot of what Brancas does is actually empowering lenders here in the Philippines, both to have access to verified data such as instantly verified bank statement data, so the last 60 days up to 6 months of bank statement data with expense categorization and income verification. Things like payments, both disbursement of the loan and repayment through a direct API without needing to use a payment intermediary. And other technology solutions, but basically decoupling the financial institution from the point at which the customer can access that. Lots more to share. It's a pretty big space, and it's very timely too, because of course the Philippines is currently working through the Open Finance Circular released by the BSP last year. And the Open Finance Oversight Committee, as we speak, is meeting twice a week to actually develop the first set of regulations to support open finance. But the outcome of this, and I really support what the BSP is doing to really catalyze this sector. The outcome of that will be more choice for customers to choose where they bank, to choose where they take out credit, and for the lending side, it gives the lenders much more transparency about how they can score their customers and determine what is the risk level, let's say, of the potential borrower. Because the fact is, in the Philippines, 50% of Filipinos are unbanked. And even among those that are banked, they may just use it for payroll. In fact, the majority just use it for payroll. So at the end of the month, they receive their payroll, they turn it into cash, and then there's no verified transaction history there. But if you look at the remittance data, if you look at the alternative employment data, like what Smile is doing with gig economy data, if you connect it to their debit card transaction history or even their telco credit score based on their subscriber status as a telco subscriber, all of these serve as alternative verified data points that can help the lender make more thoughtful decisions in who they lend to and what sort of terms. So anyway, more to come, but hopefully that gives you an intro on what Brancas does and the opportunity for consumer protection and financing using APIs. So thank you, everyone, and thank you to the Fintech Philippines and Digital Pilipinas for putting this event together. Thank you so much.
Thank you for that, Todd. We definitely learned so much about what Brancas can do for the fintech industry in the Philippines. Next up, we have Mr. Rajon Grover, founder and CEO of Grover Pay. Hi, Mr. Grover. Good afternoon.
Good afternoon, everyone. It's my great pleasure to be with all of you. I'm very impressed with what Todd presented a while ago. I think Todd has done a great job with the rest of the people in the fintech community in the Philippines. I've been involved in Philippines in a different capacity in the past. I used to assist various banks, and that was a time when nobody wanted to go to Philippines. So I made it a point to bring some of the fintechs, which were doing exceptionally good job in the rest of the world, to come to Philippines. And we started working with many banks in the Philippines. The company was set up in 2012, and our objective was very simple. These customers were not used to a very good service. These customers had to wait in queues for a long period of time. They had to travel many miles to deposit a check. So these were the challenges which most of the banks in Philippines felt. Not only the banks, the customers were saying, why do I need to go all the way to just deposit a check? So these are some of the challenges, not only fintechs, but even the bigger banks in the country in the Philippines were facing 10 years ago. Much has changed in the last few years. Things have moved for better despite the COVID. And in some ways, we all know that COVID did accelerate some of the moves towards digitalization, provided more opportunities for customers to be reaching out to the banks. And you all know about what has been the impact. And I don't want to go through all of these things, but the impact of this has been very, very bad on many communities, particularly those who don't have regular jobs or those who don't have big businesses. So what we have been doing in the last 10 years was mostly focused on the banks, and we'll quickly run through what the banks do. Then I will tell you what I've started doing over the last 2 years, because the needs of marketplace have changed. And new people come into the market space explaining how they can help with new credit alternative scoring models, how people who never thought of getting bank financing in the past could turn to alternate lenders. And I was talking to Rajon of Esquire earlier. I'm impressed by what these guys have done over the last so many years. It's simply meeting the needs of the people as we go along. Now, what we need to be doing here is very simple, making sure that not only the requirements of the banks are addressed, but the requirements of the ultimate customers on whom the banks depend are also met. So maybe if you move to the next slide, I'll talk a little bit about what Grover has been doing in the Philippines and what we have done with Grover Pay, which is an SME lending platform started in Singapore about 6 months ago. The challenges, surprisingly, in Singapore are not very different from the challenges I felt in the Philippines. Philippines, of course, the levels of transactions of SMEs are comparatively smaller. Singapore is in almost a similar situation. Many of the companies are getting the financing from the government. The banks are financing them because the government had lots of funds to lend them. But there were still some newly incorporated industries, newly incorporated companies, which were trying to do stuff, but they couldn't go to a bank or couldn't go to any other company which will give them money for starting their business or taking to the next level. So we had an example within the first 1 month of our starting this business. I came across a SME who just started with 2 young guys, and they were trying to do business with SATS. SATS is a government organization, and they were going through also a tough time. It took them quite a lot of time to get that contract. In the meanwhile, they had to pay their staff the salaries. So there was no security, no collateral, newly set up company with 2 young boys who have just moved into this role. So we said, okay, based on what you guys have in terms of your plan, in terms of what you intend doing, and in terms of its impact on the economy, we will lend you on our own books. And that was the start of a company which we call Grover Pay, which has been set up in Singapore primarily to help SMEs to not only tech up, but also get the financing, which is what every SME needs, besides their ability to reach out to more segments. So we're not like a typical fintech. We are trying to put some of these things which others have developed to make it more affordable and more reachable for SMEs, and also for some of the banks who would not be able to assess these customers based on the old ways of assessing customers, but in the new way by which you don't look at customers' collateral, you also look at what these customers are planning to do and what their business model is like. Please move to the next one. So this is what we have done in the last many years in the Philippines, primarily focus on doing business with banks. And in the last 10 years we have been there, we have been able to help as many as 35 different banks, from some of the largest banks in the country to some of the smallest banks, to even put in place systems which are not only meant to make it easy for the banks, but also for the customers. Just the example I gave of a person having to close his shop in Cebu and go to the next bank branch to deposit the check. That is no longer necessary because we have been able to develop technologies with our fintech partners by which you just take the image of a check and the image is sent to the bank and the check is cleared. So surprisingly, this facility is not available to me in Singapore, whereas in Philippines, I enjoy that facility. So we are proud to have made some small differences which really help these SMEs also to run their business effectively without having to queue up in the banks. Queuing up is another example. If you go to a bank, typically there are a number of people who are waiting up in the queues. These could be very simple things for you and me, but sometimes you're spending half an hour or 2 hours of your time traveling from one place to another place and then queue up. So we have been able to develop technology which allows a customer to book his meeting at the branch at that particular time, and everything is done. So he just has to go to the branch, put the money in there. And these technologies don't belong to us, but we have acted as an aggregator of all these things that the customers and the banks demand. Can we move to the next one? So these are some of the services we have: consulting, we do training, we do collaboration, we provide solutions. And during the COVID time, we also thought there's a need for people to take care of their mental health because we've been working long hours. So we've been helping with some courses on mental health as well as a side activity, but not as our primary activity, to just make sure that we become a part of the community in more ways than one. Please move to the next one. So this is the business I mentioned that we started in Singapore only about 6 months ago. And it was very simple. Those people who have business and they don't have any financing, we give them financing. Those people who have some financing, but don't have the markets, we help them go to new markets. Please move to the next one. So these are some of the things you're all familiar with, how customers are onboarded. I won't dwell at length, but the whole objective of this is to make it simple, easy, give the SMEs what they need, and not only give them what they need, make it simple for them. And as we said, financing for the SMEs is important, but equally important is those workers who have worked for 15 days in a month and want to withdraw their monies. Luckily in Philippines, we get paid twice in a month. But in Singapore context, despite you may think it's a very developed economy and everybody has lots of money, that's not the reality. And Mitchell will take you through about what he has been doing in that space So after doing this SMEs, we thought typically the requirements of SMEs for two areas. One is to buy some inventory, and then second is to do some selling, and third is to pay for their staff salaries. The example I mentioned of a company trying to do business with stats in Singapore was very straightforward. They want to be in a new business. They had to pay their staff salaries. If they don't pay their staff salaries, it's a crime here. So they had no choice. So we gave them the money and they won a big contract. So we realized if the SMEs need money only for one area, which is, for example, inventory or new invoices they're raising, there is additional need for them to pay their staff on time. Can you move the next one? So we decided then the time is right for us to look at also making it easy, not only for the employers, but the employees to get paid, just like we get invoice financing, just like we get things ahead of time from the banks. Why would an employee get the same benefit so that it doesn't have to go to 5, 6 years, or those lenders who just make too much money out of their business because it's unpredictable whether the customers will pay. So we worked out with a company which Michelle will talk about. Company is called Get Paid Asia. The advantage of this in a market which is going to boom in the next few years, I think, because we are behind COVID, there will be growth, there'll be requirements, and you need to keep the right people on the ground. And you need to recruit the right people, and they need to be given some benefits which make them stick to a particular company. So this is one of the things we are doing. We are also working with some of the companies in Singapore to provide the SMEs the skill sets they require to make themselves more accessible. The banks should be able to give them money because these people have done the cash flow projections well. So we are looking at the cash flows. Having been a banker myself, having been through these processes, we understand what are the kind of typical things banks, or even for that matter, anybody else who is lending money will look at. So our objective is to help SMEs in more ways than one. So this is the kind of objectives we have set for ourselves to help the banking sector, to help the community, to help also people who require to be paid wages, not necessarily using our own technology, but bringing in some people with the right experience, which, for example, Todd has developed API. And that's, Michelle has done something similar. He has developed technology, and he has been able to give credits to many employees of many companies, not only in Singapore, but also in Indonesia. And obviously for me, the next step was, once I've done something in Singapore, I need to bring it to the Philippines. So we are in the process of doing something similar. I will leave it for Michelle to talk more about this business, because that's the core of his business, and that's a part of the business we are trying to expand, not only in Singapore, but across the region, where the needs of employees are even more paramount. The last slide, can we come to? This is some of the work we have done. Can you please move on to the next one? So in addition to giving the employees the loans, are not exactly loans, but something that they've already earned ahead of time instead of waiting for the 30th of the month, we also thought some employers, because they need money to be paid to their employees on the 30th of the month, we give them this fund so that the employees don't suffer from lack of funds. So give the money to the employer, they get the money up front. There's no interest we charge to them if we get the monies back in a short period of time. So this is including financial wellness of not only employers, but employees, trying to put all these things together so that it becomes a part of the whole ecosystem. Last one after this. Can you move on? Yeah. So this is some of the work that we have done. We have most of the banks in Philippines as our customers. We have partnered with many good companies which are focused on our market, and we're trying to bring more and more. We have been helping with, for example, some of the digital banks also with making sure the transactions they do for their customers are safe. They are not subject to hacking, real-time fraud management, real-time anti-money laundering detection. And together with Mitchell's company Get Paid, we want to make a big difference in the lives of the Filipinos who have worked so hard. And I believe in the next few years are ready for reaping some rich rewards. Thank you very much. That's what I wanted to talk about today.
Thank you, Mr. Grover, for that wonderful presentation. It's amazing to know what GroverPay has been doing for the space that they're in. Now let's move back to Todd Schweitzer, founder and CEO of Brancas, to talk all about what Brancas is all about. So yes, all yours, Todd.
Great, thank you. Can someone turn my video back on and present the slides, because I don't have video privileges. There we go. Okay, I'm back, everyone. Thank you so much. I guess the agenda changed a bit, so now I'll share just a couple minutes on, and I already gave an introduction, but for this time we'll share some specific use cases of what the API economy looks like in the Philippines. Next slide, please. So just to remind you why an API economy matters, primarily it matters because Southeast Asia banking customers, and particularly in the Philippines, are underserved. So only 47% of Philippines adults have bank accounts, and only 18% are accessing online financial services today. So this is a great opportunity for non-bank and alternative and digital banks to help tech up consumers, SMEs, and help them get easier and more tailored access to digital financial services. Next slide. So what is open finance? Just very briefly, it's based on two principles. Number one, that customers own their financial data. So that if I'm a customer of a bank or a non-bank lender or a remittance company, that I should be able to easily and affordably, preferably freely, access my financial data and be able to share that with a third party. I.e., I give my consent to sharing that data with a third party for the purposes of budgeting or accounting or credit scoring or another use case. The other principle for open finance is I should be able to access my financial products beyond the channels that the bank prescribes me. So just because the bank has a mobile app or a website or a branch, I should still be able to access those products where I use them, which could be an e-commerce site. It could be where I'm sending my remittance. It could be at an auto dealership when I'm taking out a loan for a motorbike or a car. And making those products available at the point of use is so much more valuable to the customer versus taking documents back and forth. And I'm sure everyone on this call can relate to that experience. Next slide. Yeah, I just want to, it's worth highlighting too that this is not just some random, initiative. This is really led by the BSP governor, both the late Governor Nesting, as well as the current Governor Benjamin Diokno. And he really hits the nail on the head. This is about providing affordable services that fit their needs, especially for that underserved population, and promoting consent-driven data portability, i.e., I as the customer can share my data freely with my consent, and I can interoperate, meaning App A can speak to App B in a reliable way and verify that data. And it allows for partnerships between bank and fintech, partnerships between lender and e-commerce site, without needing to build kind of custom software, custom pipes each time. Next slide. Just in the interest of time, we'll go to the next one. So you can think of, next slide, please. Yeah, so the way to think about open finance is there are API providers and there are API users. And the API providers are typically banks. So it could be Union Bank providing a Pay by Union Bank API that appears on the GCash app. It could be a remittance company offering a, Western Union or ParaHub offering a pay, a remittance product using Western Union. And then on the user side, you have the third-party app. So this could be an InsurTech app. It could be an e-commerce site. It could be a digital lender. It could be a wealth management, like a retail investing app that is consuming or plugging in the bank APIs to make the products a much better experience for their end users, i.e. the customers of those API users. So it's a little bit, there's a lot of players here, but you have the API providers, which is actually the financial product. You have the API users, which are the companies that are plugging in the bank APIs to make bank products available on their app. And then you have the end users who are not represented on this slide, but these are the end customers of the bank. Now, what Brancas does is we're providing simplified software that brings all that together so that a single online lender does not need to plug into 15 different banks, or a single e-commerce site does not need to plug into all these different banks for payment channels, but actually they can connect through a single API powered by Brancas that connects to all of them. And it's worth pointing out, like, this is not the same as a payment gateway, for example, that are collecting funds on behalf of the merchant, taking their fee and then dispersing funds to the merchant. So Brancas is not intermediating payment. We're not collecting funds on behalf. In fact, we're not even collecting the data on behalf of the customer. We're just passing it through to the third party that the customer gives consent to share that with. Next slide, please. So roughly speaking, what this looks like on the API publishing side, we provide a number of API middleware tools and API management to help banks and non-bank lenders and e-wallets and remittance companies launch their own commercial APIs that they can monetize. And then API aggregation, which is basically providing that simplified API for payments, such as secure bank transfers, data APIs like statement, income, and we now have an expense categorization API, as well as product APIs. So we recently announced an investment from Visa globally, which is one of their first open banking investments in Asia Pacific. And we will be, we have partnered with Visa on a number of new API products that are first in the region, such as credit scoring based on cardholder transaction data, identity solutions, as well as some others that are not yet public, but coming very soon. Next slide. Okay, so some real world examples. So this is an example recently, actually, with Grab Finance, the lending arm of Grab, that was looking to score their drivers to give their drivers an additional lending facility, or credit facility rather, i.e. enabling Grab drivers to take out loans against their driver history, basically. So Brancas provides user consent. We provide the user login where the driver could link their BPI account. And then that BPI transaction data is shared back to Grab Finance to score the driver and determine whether they qualify for a higher credit limit. So there are many examples of this. Often it's for a consumer or SME lending use case. It's all secure via kind of modern APIs and modern encryption methods, and it's all based on the principle of informed and explicit user consent, i.e. the borrower, in this case the Grab driver, is saying, yes, I want to share my BPI bank statement data with Grab for the purposes of applying for a loan. Right? So this is not scraping data without anyone knowing about it. This is consent-based automation and consent-based sharing of secure data back to the lender with the permission of the customer. And the alternative here is they go to the BPI branch, they print out bank statements, they send those bank statements to the lender then manually inputs the statement data, runs an algorithm to determine whether the score, without knowing whether the borrower has actually tampered with those statements, right? So this is a verified and instant way of receiving that transaction data. Next slide. So next is for payments. So this is live right now in the Tonic Bank app. Now Tonic is a digital only bank, so they don't have branches, they don't have agents. It's a purely digital play. And so Brancas is enabling BDO customers who also have a Tonic account to pull funds from their BDO into their Tonic account from within the Tonic app. So they link their, so they become a Tonic account holder. Their first step is they need to fund the account, right? They need to add funds to their brand new Tonic account. And Brancas is powering some of the payment APIs and the bank APIs that allow for transactions coming from another bank where they have an account into their Tonic account. And they can do so on a recurring basis. And this also serves, for example, for loan repayment. But this is just an example of what a pay by bank open API can look like. Next slide. Here's an example from Singapore. So Singapore has a very interesting national online ID called SingPass. And so it's used to log in to government websites, but it also can be used for now logging into your bank. So you don't need to go through the KYC, scan your ID and go through that account opening process. As long as you have your SingPass ID, you can log in directly using SingPass. Now, I think we'll see some early versions of this with the Philippines National ID. But in the meantime, there's a lot of innovation happening now with banks and e-wallets that are making their ID mechanism available as a way to kind of bypass or reduce the number of steps for onboarding to another financial product, which as you may be aware, there's just a ton of drop off during that process. Next slide. So statement aggregation and data aggregation is also valuable for corporate use cases. So in this case, this is also out of Singapore. Brancas uses an accounting service called Xero, Xero, and one of our banks in Singapore is UOB. And so we've linked our UOB to our Xero accounting app so that we have instant reconciliation. So our transaction data from UOB just flows into the accounting app, and then our finance team can just easily match the payments that have come in and the payments that have gone out, fees, and they can track all of that in real time without needing to upload or manually input bank statements. So when it comes to open finance and secure APIs, this is super valuable also for corporate account data. Next slide. Okay, the last example I want to share is from Indonesia. So this is Tokopedia, the largest e-commerce app in Indonesia. This is actually for their merchants. So it's for the sellers on Tokopedia. And what this is from, I think, 2 years ago. And even 2 years ago, Tokopedia made 11 different financing options available for merchants. So this is for merchants for sellers to access a line of credit to buy more inventory, basically. And this is a win for Tokopedia because they want more inventory on their site. It's a win for their customers because the sellers won't run out of stock. And it's a win for the lenders because now the lenders can actually onboard a new borrower entirely through the Tokopedia app, right? So the old way would be, if I'm a seller on an e-commerce store, I need to supposedly download my Tokopedia seller history. Maybe I show bank statements. I bring those to the bank. The bank's probably confused because they haven't seen an e-commerce seller and it doesn't fit neatly into a category. And so they're trying to figure out if I qualify for a line of credit, and maybe that takes a month, right? Versus the Tokopedia merchant financing portal on the seller's checkout page, on the seller's profile page, where they can instantly review a few different lenders, apply for a line of credit, get approved for the line of credit, and get funded immediately for that. And then they can start topping up their inventory all inside the Tokopedia app. So a pretty cool change of how open finance can enable consumer and SME finance. Next slide. So just to summarize here, I think what can APIs do to tech up consumer finance in the Philippines? I think number one, it can enable end-to-end financial apps to serve communities, the unbanked and the underbanked. Number two, it offers alternative credit and instantly verified data so that borrowers can more accurately share their financial history, and lenders can get a more accurate picture of the borrower. It allows for real-time integration with third-party apps where the borrower actually needs that loan, that credit, right? Which could be e-commerce, payroll if they're getting a salary loan, or earned wage access, or other apps where loans originate. But big picture here, what this enables is banking and alternative financial services that are competing more on customer experience versus just market power, or where they have branches, or they have a scale advantage just because they have a larger balance sheet. It actually shifts the focus towards who has a better customer experience and who is serving a particular customer type better. So that's what gets me really excited. And what I think makes this event so timely is because so much of open finance innovation is impacting in a positive way the consumer finance industry. So that's all. Thanks for the time. Back to the rest of the panel. Thanks, everyone.
Thank you, Todd, for that informative and exciting discussion on what it means to be part of an open finance ecosystem. Next up, we have Mitchell Goh, founder and CEO of Get Paid. The floor is yours, Mitchell.
Thanks, Tina. Thank you for having me. I'm very excited to be here. My name is Mitchell, and I'm CEO of Get Paid. Get Paid is an earned wage access provider. We started in Singapore, also in Indonesia, and now we're trying to bring our product to Philippines. But what is earned wage access? I think Sir Krishan has mentioned this. Todd has also mentioned a little bit about EWA. Basically, earned wage access is the ability for employees to access wages that they've earned but not yet received. So why wait 14 days or 30 days for the next payday when you can actually access the wages that you earned on demand. And I think this is particularly useful, this product, when we are in a post-COVID area where financial wellness is a huge problem. People are being affected financially and are in a lot of financial stress. And this is a really simple and easy way for employees to, get their finances in order, to basically match whatever bills that they have or match whatever expenses they have with their pay. And we have seen many stories come across where this is really a need of the time. And I think we are in a really exciting space. And we're really happy to bring this to Philippines as well. So EWA and Wage Access is growing rapidly across the globe. And the use case is tremendous. And we're seeing a lot of startups like GetPaid come up and doing really, really well in all countries across the globe. So EWA, role in fintech, I see as one cog in a wheel, and that's where API comes in, where it's really, really important for us to provide this value to our users, where we're able to integrate with other stakeholders, whether you're a HR solutions provider, whether you're a lender, the sky's the limit. To have this API available to us will really make that user journey and improve value for all our users. So yeah, GetPaid in summary is driven to be the leading workplace financial wellness platform in Southeast Asia, and hopefully we can work with a lot of you, and do reach out for a chat, and we can see how we can work together. Thank you very much.
Thank you, Mitchell, for that wonderful introduction on GetPaid and what you and your organization has been doing to serve the needs of the time. Now, next up, we have Mark Vernon, co-founder and vice chairman of Fintech Philippines Association. Hello, Mark.
Hi there. My background is as 33 years in IT technology, and I'm an angel investor, venture capitalist, and also an entrepreneur in residence, in that I create and build startups as well as funding others. So I was in the Philippines for 8-9 years, and it's been an interesting journey. Co-founded the Fintech Philippines Association 5 years ago. And it's been great to see the growth and working together with everyone. When I first came to the Philippines, it was very hard to find others to work with, to get information, to share, and to build anything. So that's been good. In terms of what I do primarily at the moment, building a platform, or we build platforms, an app development platform with embedded banking and fintech. So in the Philippines, the brand name is TagCash. That's an e-wallet, just like GCash, PayMaya, licensed by BSP as an e-wallet. And what it allows people, companies to do is to build their own web app or mobile app very quickly. So either using HTML or using, we use Google Flutter as the primary development language or platform for it. And we also create templates so that people can create instant apps. So you can have your own app running your own URL, your own name, etc. Within a few minutes. One of those template apps is lending. So you can create a lending app with a backend to run it as well. And all of that data is, all the data you create is available via API within TagCash as well. One of the examples of the lending app is something we did a couple of years ago with another company that I own called Society 8, and we built up to 30 stores around the Philippines. 2,000 brand partners, most of whom were single mothers or single women, sorry, 95% of them who were previously unbanked, and they were selling goods through the stores and getting paid through the app every day. So cash would come in through the stores and they would get paid through the app, and then they would spend it, withdraw it, etc. So we were lending based on the past 3 months of traffic, of income coming in, and because they had no previous credit history, no banking history, etc. So the stuff that Jerome's working on, allowing alternative credit scoring or that alternative data to be used, I really want to use stuff like that and see more of that. So within Takash, we have some like tools that are really useful for developers. AppWrite, which is a platform to create your own data and APIs, all wrapped up inside Takash. A GitLab repository for code development. There's a lot of things, but the primary aim is to let people create apps that that have the difficult stuff built in. So in the case of Takash in Philippines, it's the money license. It's really hard to get it. It takes a long time, very expensive. And if you just want to develop an app with embedded wallet, then that's not the primary concern. The primary concern is building the app, and the money is just is useful, but you don't want to go through the whole process of getting a license just to do that. So we make that easy. We're one of the examples. Another example we're working on is going for the cooperative market in Philippines, which is 18,000 cooperatives, 11 million members. So we're working on another brand in conjunction with another company to offer cooperatives the ability to have their own app, their own web URL, etc. And a big part of the cooperatives is lending as well, and so we make that easy. With Takash is a brand name in Philippines, but I'm building multiple brand names around the world, partnership with other companies, other EMIs around the world, and also in different industry sectors. And Fintech is not just money. We're also developing Tagbond, which is another brand name. That's basically the same kind of thing, but the difficult part is it's basically custodial, non-custodial crypto and token management, stable coins, possibly CBDCs, central bank digital currencies, and NFTs, etc. So that side of having the wallet already built, and all you do is build the apps that use it. It's the same concept using the same core software. So for us, I'd love to be able to build city apps. So each city in the Philippines would be able to run their own apps, and different parts of that. It's like a super app for each city with embedded banking again, and that brings more people to the platform, more people that can have data that can be shared to get credits in a safe manner. And Todd's mention of sharing data as you want to, when you want to, that's a really important push to have in the Philippines. I'll talk later about the things that where we're at right now. You've heard a lot of where we're at right now, but there's a few things we need, and things like the open finance move and sandbox in the Philippines will really help. And that's enough from me, and back to the rest of the panel. Thanks for inviting me.
Thank you, Mark, for that. It's interesting. It's indeed interesting to know what the fintech industry is doing to tech up and innovate in the space that they're in. Next up, we have Rajon Chandani, Chairman and CEO of Esquire Financing. Hi, Rajon.
Hello, I'm going to share my screen so you can see my slides. Can you guys see my slides okay?
Yes, definitely.
So I'll start with the impact of COVID. I presented this in 2020 when COVID just started, that it'll start with a stage of fear, move towards a stage of learning, then eventually come to a stage of growth. And I think we've reached the point of stage of growth. We've seen the number of active cases, well, towards the year end falling down, but Omicron, spiking it a little bit, but hospitalizations and the fatality rates are much lower. This is also the fact that vaccination is up. Vaccinations at, I think, close to 60% now towards the end of Jan. Commuting capacity was the biggest problem during the lockdowns. When most of the public commuting capacity moved down to close to 10%. This really affected businesses. Port congestion on top of all of this also affected businesses, especially the MSMEs here in the Philippines. Close to 76% of businesses in the Philippines in 2020 stopped or closed operations, and only 2% within Metro Manila were full operations. Nationwide was about 34% that were in full operations. The COVID impact has a severe impact to the Philippines. I think this was a KMC Savos report that ranked it as 7 out of 10 as impact on the Philippines. Luckily, we've seen 2021 numbers starting to recover. In 2020, we saw close to a negative 13% in GDP. Capacity still ample available, so this is actually a good sign for the country. So the SMEs is really businesses that are the registered businesses of about 1 million registered businesses. There's also about 4.5 million unregistered businesses. 60% generate the jobs in the country, and they contribute about 35% of GDP. Most of these businesses have a 27-day cash buffer. So what's really needed is cash flow or capital for these businesses in the Philippines. What we offer is fast hassle-free non-collateral business loans. So, year on year, we've been in the top 5 out of all financing companies. In the SME lending space, we're always ranked one of the best in SME financing. Construction's slowdown has also affected the economy heavily. What's supported the economy is the fiscal easing, the 29.6 billion Bayanihan and the follow-on offerings of Bayanihan 2, and now the inclusion of Bayanihan for the budget in 2022. What's interesting is that the corporate debt to GDP and SME loans to total loans is still far lower than the rest of the region. A lot of businesses are actually winners of the pandemic. So medical, food processing, personal health care, ICT, agriculture. We're moving towards a 5G economy where everything's becoming cloud-based, everything's becoming app-based, everything's becoming smart. So really, it's moving towards a variable cost structure for businesses, communications between businesses and their clients and their employees. Business 2.0 is really trying to figure out the repositioning and reorganization of your teams, and then of course planning and executing based on what the new normal would look like. So for us, business transformation has to do a lot with technology. So our new credit standards, coming from the traditional 5 C's of credit: character, capacity, capital, condition, collateral, is now also looking at how COVID has affected the businesses and how they reorganize themselves in the new economy. The portfolio still remains robust. It mimics the economy. It mimics the registered businesses in the country. Going forward to the new normal, you have to make changes. You have to kind of come into the new age. So all of our interviews and CRs are now conducted by a video phone or telephone calls. Physical meetings, with clients are actually discouraged. and we've established work from home processes across the organization. Also, in terms of technology, paid advertising, customer application portals, referral portals, OCR, these are all things developed in the last 3 or 4 years, even prior to the pandemic. So this really put us in a good position to be able to cater to our employees during the pandemic. This is just a snapshot of our system architecture. Everything is cloud-based, everything is silo-based. This is our 3-year system landscape. And all of the dotted lines you see in between the big systems are actually APIs. Strategic partnerships are in place. I mean, to be honest, technology is probably at the forefront of all of these strategic partnerships. We're also pushing a shift towards output-based accomplishments rather than time-based accomplishments. Industry we like, general mass retail, agri and food, IT communications, wellness, medical tourism, health tech, and prop tech, online platforms such as marketplaces. Industries that we think need to pivot are, of course, international or traditional tourism, luxury retail and malling, restaurants, bars, clubs, concerts, and sporting events. These are the industries that we think need some sort of change. So that's it for me. I'll turn it back to the panel.
Thank you, Rajon, for that wonderful presentation. And thank you again, panelists, for your introductions and for being with us today. But that's not it. Let's move to our discussion about APIs, Web 3.0, and FinTech. I will now be asking a series of questions, each directed to a specific panelist, followed by a series of questions that can be answered by any member of the panel, or as many members of the panel who want to respond and share their insight. During this portion, we encourage our friends in the media to send in any questions you might have via chat, along with your name and publication. These questions will be read after the panel discussion and may be directed to any or all of the panelists. You can also name the panelists who you want to answer these questions. So let's begin. So the first question is for Todd Schweitzer of Brancas. The COVID-19 pandemic has seen a dramatic increase of usage of contactless payment solutions and online banking. In an API-enabled era, even greater functionality and convenience will become the norm. What improvements to consumer protection should Filipinos expect with this greater functionality?
Yeah, thanks for the question. And that is a very broad question. So first off, I think let me think. So first of all, the BSP and the National Privacy Commission, I think, have recognized that not only are Filipinos preferring online payments and contactless payments, but there's been a huge surge in demand from merchants that want to offer new digital payment types. Obviously, the public health need for that. So, credit to the government agencies involved directly in online and contactless payments for kind of supporting it and providing the enabling infrastructure. I think a few things we need to recognize, right? Number one, we need online payments that reduce the number of middlemen involved. Typically, when you think about online payments or digital payments, it's passing through one or two or three or four different middlemen on the path to actually getting to the merchant. And that's because today, if you are an online business, or if you're even a brick and mortar business and you want to offer contactless payments, you need to work with your bank, who then provides a payment processor. That payment processor leases you hardware. And then by the time you have that set up, your total transaction cost is going to be 5-6%, right? Which is massive if you're a retailer. That's a huge part of your profits. And so I think what we need to encourage, and I think what API technology can help support, is more direct online payment methods that don't involve cash moving from multiple middlemen that are providing the hardware or that are intermediating and collecting the payment on behalf of. If customers are preferring to pay using e-wallet or direct bank transfer, then powered by APIs, that payment should be going directly from the customer's account into the merchant account. And all you need is the secure software instructions that are giving instruction to the bank to move the funds rather than someone collecting on behalf. So I think that is what I'd like to see, certainly, beyond kind of greater adoption of contactless and online payments, which I think is natural in this day and age, is greater choice for consumer, but also for the merchant to see contactless and online payments as a low-cost option and not sacrificing, the majority of their earnings just to support their payment processors.
Thank you for that. We're all definitely looking forward to hopefully that happening, of course. Thank you for answering that question, Todd. Now, the next question is for Mr. Jerome Eager. Financial inclusion and democratization of data have always been among the promises of an API economy. However, these remain vague concepts to most consumers. Can you tell us what these mean in everyday user-friendly terms and give us real-world examples of how businesses and consumers will feel their benefits in their day-to-day lives?
Okay, great question, first of all. Thanks a lot for that. So, yeah, what does democratization in data mean? Well, I think in general, it mostly means that data is yours, right? So that's how I interpret it, because usually when you see siloed data these days, it is not available to you and to you as an end user. And basically what APIs are all about is really to remove these thresholds and to make your own data available to the best use of your interests. So what does that mean in a real life application or in a real life environment? It can basically mean that whatever application you would like to use, whether we're talking about insurance or whether it's financial institutions of any sort, I think what we just mentioned here were a couple of wallets, or specifically consumer loan applications, BNPL, very interesting. But at the same time, we see, the regulatory oversight, and very rightfully so, actually exerts more scrutiny on lenders. So lenders will basically have to cap, in many cases, interest rates. And what does that actually mean is that you have to go and really look at the data and really look at your clients. You have to understand your clients much, much better these days. And yeah, as a matter of fact, this is also important for financial services to really better understand the customer. And then in the next step, also be able to serve the customer better. So it's kind of like a positive cycle where there's more data available, it will be used, and then part of that additional value obviously also passed to the end user. The extent to which this translates into more democratization of data is really that you as an end user have more faster, wider, and more convenient access to these benefits that are basically deeply rooted in your own data. And so when this data in the past was owned by incumbent players, big data players, maybe sitting in another country, now today that would basically mean that you can unlock that data. And I think, as Todd already said, there's not only in the Philippines, but gradually you can see this trend around the world. Also in the GDPR, as well as in regulations that you see everywhere in Asia specifically, is that regulators are very clear what that means. Data belongs to the individual, or to use the vernacular, they're the data subject. So I think this is what democratization of data and reduction of entry barriers to using your own data actually means.
Thank you for that. I'm sure a lot of Filipinos are looking forward to this greater functionality and this development in APIs and fintech in general. So the next question is for Mr. Mark Vernon of Fintech Philippines. Given that important goals of an API economy are financial inclusion and democratization of data, how far along is the Philippines towards achieving those goals? What specific milestones do we need to aim for, and what do we need to do to reach out to them?
Well, it's come quite a long way in the last 3 or 4 years, actually. The regulated institutions like BSP, SEC, and they have made certain steps to make things a lot easier and to fill in the gaps that are missing at the moment on the government side. Then we have companies like Smile API that allow you to take that data from alternate sources, etc., to build up a credit score for someone to get lending permission. So, for example, on the banking side, we've got Pesonet and InstaPay allowing easy payments from anywhere to anywhere. And we have universal QR code for contactless payments, very cheap. We got the open finance movement to allow data moving a lot easier. But we need a credit scoring system like in the US, so that it's easy for companies like ours to be able to just say what's the credit score of this person based on lots of data, possibly that the user can actually submit data to, or that can be tapped from different locations, different areas. We need, it'd be nice to have an online NBI clearance set up, an API for that. And we really need the national ID with online checking of it, because it's one of the problems right now that we can't do automated KYC very easily in the Philippines. Things like the sandbox, the fintech sandbox in the Philippines, that should help allow us to build faster and to check with test data, etc. And there are other products coming quite fast onto the market, like decentralized finance, DeFi, but that's really only open to people with crypto collateral. It's not really for unreserved lending, for unsecured lending. So we've made a lot of progress, but we've still got some way to go to make it really good. And I just wish it happened a lot faster, but that's just me, impatient. So that's about it. Making lots of progress, but still got some way to go.
Thank you for that very encouraging answer. Lots of progress, but we have some way to go, or we have not a long way, but we have we have a short distance to go, I would like to say. Thank you for that. And now we have a question from Mr. Rajon Uttam Chandani, Chairman and CEO of Esquire Financing. As a company that has provided financial options for MSMEs for more than a decade, what benefits will the transition to an API economy have for your company as well as for your clients?
Well, I think an API economy, or a 5G economy, as I refer to it, is an enabler. By connecting services, shared products, data, practically the whole business becomes faster and more accessible for their partners, their customers. One of the things that I think is a big shift for us is actually creating APIs with the platforms. So these are the shopping platforms like Lazada, Shopee, and as well as integrating our APIs with some of the banks who offer cross-marketing services like CCAP of Union Bank. I think this point has been touched upon a couple of times by a few people. It's really connecting the customers, or providing accessibility to customers to financing will really benefit the whole economy. So I think API is just an enabler to be able to communicate with these customers. So as long as we're able to reach these customers and communicate with these customers, I believe that we can really try and help as many MSMEs as possible.
Thank you. That's great to know. At least we know now that convenience is, a huge, would be a huge outcome of integrating APIs into our, our daily lives, our daily apps. So that's something we can definitely look into, I hope. Now for Mr. Krishan Grover of Grover Pay, we have this question. From a consumer protection standpoint, what needs to happen to ensure a reasonably high and effective level of consumer protection among Filipino fintechs and for Filipino consumers? What measures has your business taken to ensure this?
Very good question. I think this has always been a challenge, particularly when you start trying to get speed, lower cost, and good experience. When you do some of these things, the net result is some of these controls do suffer. This is not only the responsibility of banks or fintechs, it's also the responsibility of consumers to be responsible for their own protection. So there are three participants in the whole exercise. One is the banks who do most of the transactions for you. They need to make sure they need to invest in technology. They need to make sure that, Philippines surprisingly and unfortunately is in the list of gray list of countries, which doesn't take its AML things as seriously as they should. And I believe the government is doing a lot of work to get out of that gray list. But this is some of the things that has been affecting the community and affecting the Philippines' reputation as well. The kind of measures and controls which are expected for the banks to invest in technology and also invest in their processes. Because some of these processes, are still coming from the old days where the world has moved on quite a lot. So that is one stop that we should look at, because that's where most of the transactions still go through, even if it goes through a fintech. Fintechs sometimes in their desire to create opportunities and get more business, they also cut corners, and the due diligence that need to be exercised sometimes overlooked because you need to get to customers fast, you need to process things faster than others, want to give a good customer experience. So I think for the banks, it's the technology, it's the processes. For fintechs, due diligence, because once you lose the confidence of consumers, it's very hard to get it back, as we have seen in many such instances in some of the banks in Philippines. But more importantly, and ultimately, you and me are responsible for our own protection. So we cannot just take things, security or cyber attacks or exchanging our passwords and other things lightly. I think that more work needs to be done there. As a part of our own business, we are trying to, when we give loans to a customer, we also try to look at his cash flows, and we want to see that we are responsible lenders rather than give money to making some more money. And also to make sure that we put in place necessary checks. Maybe, for example, the old stage in banking used to be you have 2-level checks to ensure that nothing goes through, because if you're just one person doing it, there's a possibility of your overlooking it. So I believe all of us have to play equal role. And with all these digitalization and frauds taking place, I think everybody is aware of those things. It's just a little bit of more what we've been doing. As Mark mentioned, we're on the right track, but we need to accelerate and educate the banks, educate the fintechs, and educate the consumers, who will suffer the most if we don't take care of our own transactions.
Thank you for that. You made a very good point about being responsible for our own protection and for, let's say, banks and other financial institutions to take part in the protection of their consumers as well. Now we have a question for Mr. Mitchell Go of Get Paid. An API economy is conducive to innovation, but not everyone grasps the power and functionality that APIs will give, both from a business owner standpoint and a user standpoint. Can you give us an idea of how an API paradigm can actually help a small company grow and innovate?
Yeah, so thank you for the question. Absolutely, I think in this day and age, it's not like before where you think we can do everything ourselves. I think having your own vertical and being a master of one's own vertical is really of utmost importance. And to do that, we need partnerships, and to transact in partnerships securely and effectively, we're going to need APIs. And to have the APIs in place so that we can transfer data securely and effectively is really, really important in this day and age. And as we move forward in this digital age, I think having that sort of partnerships and that kind of trust, digital trust between the partnerships is really, really important. And we want to do that securely and hopefully do it, really securely. I think trust is very important, and it's also very fickle when it comes to consumers. You know, just in the news in Singapore, a lot of scams going on, and I think one of the banks in Singapore got hit with quite a bit of a scam, and a lot of consumers lost quite a bit of money. And the memes coming out on Facebook was like, oh, we got to go back to the old times when we put our money in Milo tins. So trust is really fickle, and yeah, it's something that we really need to get right.
Okay, thank you for that. You know, trust and security when it comes to anything that has to do with finance. It's a very tricky environment to navigate through, but hopefully with APIs, this definitely, how do I say, it would definitely expedite the process towards data security. Now let's move on to the panel questions. Now, please turn your cameras on, gentlemen. So we have a few questions from the media on what they would like to know more about APIs, let's say businesses, MSMEs, all of that. Now, the first question is for Todd. So in an open finance environment, who between the API provider or API consumer owns liability for transaction monitoring? Perhaps parties can agree by contract, but from a regulatory perspective, is liability shared?
That is a specific question that is actually being looked at by the BSP today. But the simple answer is that, so by transaction monitoring, I assume we're looking at fraud detection and basically checking for kind of bad actors and scammers and whatnot. Generally speaking, that is the liability of the provider, because the API is just a channel of the provider for the provider, but it's ultimately the provider. I mean, if you are a bank providing an API, or if you're, you know, if your account holder is with the bank, you as a licensed institution, you are responsible for managing the risks and making sure that you've KYC'd that customer appropriately and making sure that you're tracking the transactions that go on. I mean, that is your role as a regulated licensed institution. So whether or not that fraud happens through an API or through your branch from someone who comes up with fraudulent documents, that's that's part of the how, but the what is still, you know, fraud or bad actor tracking, which is a responsibility of the bank. That's probably a more controversial take than I should be saying at this point, but and I see Mark laughing. But I mean, frankly, like that's why institutions are regulated and have to go through compliance checks to make sure that they are properly managing their account holder data.
Okay, thank you for clearing that up for us, Todd. Next, we have a question for Jerome. In what ways will an API economy actually benefit MSMEs?
In the case, well, okay, so there are also, I think there's a few assumptions that we also have to make here, right? So we have a very clear trend in terms of digitalization of the economy. So the more the SMEs and micro SMEs are moving online and have more of their data available online, the more they're going to be empowered by this kind of development. So this is definitely one aspect of that. I think another one is also that just from the demand side of that data, there has to be, you know, more awareness that old processes are, you know, a thing of the past. And I encounter this with many, you know, customer discussions that we see that there is, you know, sometimes, you know, it's quite interesting to see that there are so many data points that are available, and people are sometimes frankly surprised to what extent this data can be used for modern and really advanced origination. We're talking about AI, natural language recognition, all of the possibilities and all of the doors that are open all of a sudden for using contextualized data. And I'm not necessarily talking only about data from the gig economy generally in the employment. There's just so much data that that appears on a day-to-day basis. Just when we're talking about specifically, what are purposes, right? And there's also the trickle-down effect that I mentioned. For instance, if you have freelancers that are then again employing freelancers, yeah. So this is very interesting, and a lot of data is generated there. So yeah, I think this is the my answer to that take, or my take on that.
Okay, thank you for that, Jerome. Now, I have a question for anyone in the room, of course. Anyone is free to answer this. What are some of the services available to Filipinos that are already API enabled?
Okay, if you listened to Todd before, you'd already seen an example of Gcash connecting to the BPI to get data immediately. So that's where it might take a long time, a few days or weeks to get that done normally, then this would take just a few seconds. So that's an direct example being used right now. There's lots of other different things, but that's probably a concrete example that everyone can understand.
Okay, thank you. And we also have another question for Todd from an anonymous attendee. How do you think open finance should be regulated in the Philippines?
Yeah, so a lot of you will know there's, this is a work in progress from the BSP. So there is a circular, which is basically the guidelines, and that's underway now. I think, so the most strictly regulated version would be coming out of Europe and the UK, where basically the regulator required the top 9 banks to publish certain APIs for certain financial use cases, and it became a compliance process, right? So each of the large banks then had to go pay tens of millions of dollars to a system integrator to build these APIs because the regulator told them to do so. Frankly speaking, I think that's a bad approach, because that turns open finance into a compliance exercise rather than focusing on the commercial value and actually the business case for building and managing open APIs. So currently in the Philippines, I think they're following a great trajectory. Basically what they're doing is, they're kind of building the fence, right? So they're saying, here is the fence or the perimeter, and there are certain IT and operational tech standards that need to be in place. And as long as you have those in place, the regulator will allow innovation to happen. And if one of the large banks doesn't want to participate because they see it as negative, because they've built all these branches over the last 30 years and they don't want to build APIs, then they can sit on the sidelines. And that's no problem, because it gives space for the smaller banks or kind of the more digitally focused banks to play a different game and to really focus on APIs as a new product set. And that is where the innovation happens, right? So you're not forcing a requirement. You're not going through years of consensus building with the Bankers Association. Rather, you're giving a green light to the more digitally focused banks to proceed. So that's the approach that the regulator is taking in the Philippines, which I think is amazing, actually, and is really encouraging for innovation. And that's part of the reason why we're already seeing banks and non-banks that are exposing APIs and building API-enabled products already here in the Philippines.
Thank you for that. It's good that that financial institutions are actually opening up to the possibility of, or the use of APIs in their, I'm not sure what the right term is, I think system, or their financial system. I think that would be the term. So I have a question for Krishan Grover, Mr. Grover. In what ways will an API economy actually benefit MSMEs?
See, the biggest challenge SMEs face are ability to take credit and get access to credit. So API economy does make it convenient. You can get all the information that we talked about. So they don't have to wait for weeks and months to collect the information from their banks, and it takes time. So the whole process becomes spontaneous. You can see what they are doing in terms of their cash flows. You can see who are their customers. Of course, with their consent, you have access to all the information that makes it easy for the banks or any fintech to lend to them. the challenge for MSMEs has always been they don't have proper fully account records, or they don't have collaterals to support. Their businesses are future looking, whereas existing companies normally get monies based on how much money they have in the bank, or what processes, what they did in the last 1-2 years of their financial. If you look at COVID, lots of companies have done no business at all. So by that, if you go by the previous records and don't look at the future, you will never be able to learn. I think the API-led economy makes that quite simple, makes it easy for lenders to assess their risk and disperse funds quickly. Because if you don't disperse funds in time, and he needs to pay his staff or he needs to buy inventory, then you are at a big loss. So I think we'll make the whole process smoother, cleaner, of course, without sacrificing the risks that come, which will need to be taken by all the parties concerned.
Okay, thank you for that, Mr. Grover. Now I have a question for both Mitchell and Rajon. Are APIs limited to financial technology applications? If not, what are other API functionality is common? What other API functionality is common?
Mitchell, you can go ahead.
Yeah, no, you don't. It's not limited to tech players. Definitely everyone can get involved. I think one of the trendy topics is embedded finance. There are companies out there that can help you get up to speed digitally and be able to digitize whatever offering that you're trying to do, and also plug you into a ecosystem where other players are involved and add value to your end users as well. So definitely not just for tech players, definitely everyone can be involved. How about you, Rajan?
So I tend to agree with Mitchell. In fact, we're probably not your typical fintech, but APIs are very, very important. APIs is really a means or a way to communicate, whether it be internally or externally. We feel that APIs are basically the connectors and the means for communication. So as systems or different systems all move towards the cloud, and we start to look for the best cloud-based systems, APIs are very, very important to be able to integrate systems, to be able to network systems. APIs are really the band that connect systems together, and whether it be offline or online, property or any sort of industry, I think APIs are an integrated part of society today.
Okay, thank you. I have to be honest, coming from someone who's new to the fintech industry, it's great to know that there are other purposes for APIs. Now, thank you, gentlemen. That was certainly an enlightening discussion, and it gives us a more solid and better picture on what APIs, Web 3.0, and fintech can do for our nation. Thank you again to our amazing panelists. Now I will be handing the floor over to Mr. Jove Tapiador, a trustee of Fintech Philippines Association, who is here to preside over the induction of new members of Fintech Philippines.
Thank you, Bettina. In the interest of time, and also to ensure that we have enough time for the induction, let me share a bit more about who the inductees are. Rather than going through the usual raise your hand and maybe state your company and stuff like that, it would rather be good if we will just introduce the companies, highlight them, and give them an opportunity, if they're available, if they're here in the audience, to share more about their company. So the Fintech Philippines Association is the largest and most inclusive trade, finance, technology finance, or fintech organization in the Philippines. And we have more than 150 members. But these new members, I'm proud to introduce to the group. Next slide, please. The first one is Moneybeast as an advisory member. It was established 2016, but it is the first cryptocurrency OTC service in the Philippines that allows for making the exchange between currencies and digital currencies more accessible to many. Do we have a representative from Moneybeast here? If so, please just raise your hand or shout out in the chat to be recognized. Next slide. Multisys is an advisory member. It is one of the more well-known software engineering solutions firm that provides a wide range of cost-effective and full-scale service to tailor fit and empower any business. So they've been in the news lately for the past 2 years because of their initiatives, and we're proud to have them as our advisory member. If there are any representative from Multisys in the audience, please acknowledge, just have and recognize yourself in the chat box. And that goes the same for any other member that is being recognized right now. Next slide, please. Microsoft. This brand needs no further introduction, but we're proud to have Microsoft as an advisory member. In the Philippines, with their reach in all sectors, they are motivated and inspired every day by how their customers use their products. And we look forward to working with Microsoft in Fintech Philippine Association initiatives. Next slide, please. Bolt Tech, as an advisory member, it is an international insurtech with a mission to build the world's leading technology-enabled ecosystem for protection and insurance. It serves customers in 26 markets across North America, Asia, Europe, and is headquartered in Singapore. Next slide, please. Igloo. Igloo is also our advisory member. It is a full-stack insurtech startup founded in 2016, leveraging big data, real-time risk assessment, and end-to-end automated claims management to create innovative B2B2C insurance solutions. We're proud to have Igloo in our membership, and because they also help enable other fintechs and even financial services firms to eliminate exposure to operational risk, create new revenue streams, and optimize and enhance existing products. So welcome, Igloo. Next slide, please. HGC Global Communications is our corporate basic member. It is a leading Hong Kong and international fixed line operator that own an extensive global network and infrastructure across 5 telecom routes integrated into tier 1 telecom operators in mainland China. So welcome, HGC. Next slide, please. We also have individual members. Carolina Coloma, next slide, please. And Francisco Mauricio. And I think that is the last. Is there any further slide? I think that's it. So we're proud to welcome all our new members to Fintech Philippines Association. And if you would like to join as a member, please just check our website, fintechph.org, to learn more about the association. We're proud to be partners with Digital Pilipinas, and we're proud to support this event. So thank you for this opportunity. Welcome, new members of Fintech Philippines Association. Back to you, Bettina.
Thank you, Jove, and congratulations once again to the new members of Fintech Philippines Association. Well, that's all the time we have for today. We hope we were able to present APIs and the overall benefits they can give our country. We thank our guests for the many new and interesting information, as well as fresh insight that they shared today, as well as the media for your generous participation. With that, we conclude our event. My name is Bettina Gayoso. Thank you and good afternoon.